The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks, and I've got two more stocks for your aggressive growth radar screen. Our first stock is going to be Wingstop. Can't stop the Wingstop. W-I-N-G. Wing is the ticker. It's a Zacks rank number one strong buy. And in this video, I do love to have the A for growth and an F for value. That tells me right away that I am on the right path. You know, to me, that puts my guy right there. It puts a big smile on his face because I like growth. Value investors and growth investors are inherently looking for different things. So that's why I always look for that. That tells me right away I'm on the right spot. So let's just go through our normal sense of numbers, and we'll talk about what's going on in the Wingstop. First, we're going to look at our first thing. We look at how has the company performed quarter to quarter. And we can see 4 straight beats, and they are a consistent level of beating. You know, right? I mean, we're going to call it 31% on average because of this 42% beat, but 28, 25, and 28. I mean, that you got to love that. That tells me that Wall Street can communicate its ideas to the management can communicate its ideas to Wall Street, and therefore they can get a beatable number out there. All right, so how have the estimates changed? And this is the basis of the Zacks rank. I see 50 cents moving to 51 cents. That's a penny. 51 moving to 52 right there and holding steady. That's a penny. But we got to 209 to 213 to 214 to 215. I like that. That's continuous moves up. Implies the back half of the year is really going to see that last quarter kicked up a lot. So next year, 244 to 249, and next year is about 6 months away. So visibility getting a little bit better there. I'm going to cheat a little because I don't know too much about the Wingstop other than they sell wings. But how about the consistency of growth here? We're looking at 20% this year, forecasting 13% next year. We're still, I would have thought it would have been a lot more for this company. But there's your top line sales numbers. So in the $400 million range, it's going to be moving up. All right, so here's the struggle. Here's the struggle. It's a 90 times forward PE, even after posting 42% top line sales growth in the most recent quarter. That 90% is really going to scare a lot of people. Price to book is an NA. I don't like to see that because it's a negative. It's a negative number. So you're going to have that as a problem for a while. 15 times sales for a restaurant. That is a lot. That is a lot. I'm not going to lie. That is a lot. Your operating margins, though, are pretty strong here for a restaurant. You know, you would figure that they're in that high single digit, low teens. But Wingstop's doing something right here. But, you know, the whole idea here is it is stiffly valued. It's a stiff valuation. But let's take a look at the chart here. We can see, you know, here's your level of earnings coming in there, and now, woo! That's your. I've been told not to do so many woos. I sound like Ric Flair, but you know, I just moved that up there to show that's the 2025 line. I'll put it back to where it was. So when you look at that, you see the big bump up. Like the stock price didn't deserve to move up too much because that's the basic earnings level from this year to that year. But then it did move up here, and it has really moved sharply. It has really started to move here. I think that's why I wanted to make sure that this got onto the radar screen and got you know, the story got told the way that it's being told here. You know, here's your beats. Look at that. Look at that nice move. 80 to what, 200 plus. So I like the Wingstop. Obviously the valuation is stiff. It's hard to wrap your head around a restaurant like that, but there's good growth there in the number of stores, and if they're seeing same store sales growth in that big you know, 30 to 40% range, that's impressive. Just impressive. So definitely one to keep on your radar screen. All right, let's move ahead to our next one. It is Nutanix. Nutanix, that's NTNX. Zacks rank number 1. That's a strong buy. A for growth, F for value. This is a networking, computer services, IT services kind of style company. I don't want to go too deep into this, so let's just go right into our numbers. Have they been beating the number? That's your biggest question when you're looking at this sort of thing. Can management talk to Wall Street in such a way that they will have a beatable number? And they have a very beatable number. So I see we really only have estimates from KeyBank and our lovely person at Zacks as well. So that's good to see. But we missed a quarter there where we didn't have any estimates. So interesting. But obviously they're beating the number quite handily. Where are the estimates going? Well, the estimates are going up. That's a big move. 14 cents to 15 cents this quarter, 5 cents to 13 cents next quarter, 21 cents to 49 cents. I'm going to put that arrow all the way at the top of the screen. You've doubled your estimate for the year in the last 60 days. That's outstanding. And then, next year you've moved up, but boy, oh boy. Does that count as a woo or a gosh or a gee willikers? Golly gee. I'm trying to be the Ric Flair of, and he was a professional wrestler. I'm trying to be the Ric Flair of strategists here at Zacks. 16% top line growth this year, 12% next year. So steady growth, but big time earnings growth. Look at that, 206%, big time. Can I get a Ric Flair woo in there? I think I'm gonna take one. I'm not gonna. Okay. Only 60 times top line sales, 11% sales growth. The top line, 60 times forward earnings. I'm sorry, getting ahead of myself. 4 times price to sales. No price to book again. Negative numbers in price to book. You don't really want to see that sort of thing, but it will happen from time to time. Negative net margins, but they're going in the right direction. All right, let's take a look at the chart and wrap this thing up. Boy, these estimates. Look at these lines for estimates. I mean, we're seeing this woo. Yeah, I know. Too many woos. I get you. I'm starting to realize it. While the stock is kind of moving, I mean, in a multi-year, you're in a downtrend, like that sort of deal. But these estimates are all going up, so something has got to give. Something has got to give. I don't know what it's going to be, but something's going to give on this. And I have to hope that the stock moves up. I mean, we've been beating the number like crazy. I don't even see a miss. I don't even see a miss out there. Estimates moving up. This is definitely one that I want to keep on my radar screen, especially if I'm looking for a tech investment. Well, that was a lot of fun. Be sure to join us next week when we look at 2 more stocks for your aggressive growth radar screen. And be sure to go to Zacks.com/promo to see all of our latest promotions.